Maverick traders, welcome out to your market roundup. It's August 19th. Corey here with you. We're always going to take a look at meaningful news in the markets. We're going to talk about sectors rotating, what's strong, what's weak, and we're trying to highlight the best bullish, bearish, neutral trade ideas, and usually where the trend is going. As the saying goes, the trend is your friend. We're looking at relative strength, relative weakness, taking our cues from that.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So today is more of the same, really what we've been seeing, which is a historic rally, the strongest rally since 2023. You'd have to go back a year or so to see one like this. Stocks have rallied for 8 consecutive days. It's just more of the same. Dow up 0.5%, S&P up 1%, NASDAQ, the Russell up almost 1.5, 1.25. Oil took it on the chin, down 2.5, which oil had a big run and it's pulled back the last few sessions. Gold basically flat on the session. But the big news is just stocks are rallying, and I would not have anticipated them to go up 8 straight days, but we put in that big exhaustion low, and since that exhaustion low, it's just primarily been lower left to upper right. We could have rolled over, we could have pivoted at some moving averages. We didn't do that. We blew right through them. So it's strong, and it remains to be strong. Now, will there be pullbacks and some zigzag? Of course, but the markets have really had follow through to the upside. Harris proposes raising corporate tax to 28%. That would be, on the balance, a negative for corporations. More they have to pay in taxes, the less they get to keep in earnings. Advanced decline line, about 3/4 of stocks going up today, and the 50-period moving average has flipped. Last week it was more bearish. This week, more bullish, and stocks have gone above their 50 MA. We're trying to recover, trying to get back what was lost, and it's doing a pretty good job of doing just that. Now, as we turn to the S&P chart, again, I would not, seeing a bounce here from this big spiky move and the VIX spike and all of that, to get a bounce here and even a strong bounce in a bearish market, not shocking, not surprising at all. After we bounced initially, see how they tried to knock the market down, and then it just kept pushing higher. Again, that's not shocking and surprising, but as you get up towards these levels where you fill the gap and you hit the moving averages, this is where I would have at least expected the markets to pause, maybe pivot lower, consolidate something, and just didn't do it. Look at the gap higher and continued run to the upside. I pay close attention to gaps because gaps give us a sense of really just a strong, violent move, right? It's not trading during market hours. It just takes off. And just the same way that this gap down and this gap down confirmed some downward pressure, and then even this huge gap down kind of signaled that there was exhaustive type of behaviors. Well, here you've got upward gaps, and these upward gaps are bullish. So make no mistake, the markets have recovered, more bullish than bearish, you would have to say. As we look at the NASDAQ, same thing. The gaps we're seeing are going up and through, and you could even say that these are really island reversals, meaning you gap down to this area and then you gapped up away from it. And again, that's a bullish formation. That tells you that it's kind of sucked the bears in, and now it's exploding to the upside. So you have to give the benefit of the doubt in terms of where the trend might be going next, more to the bulls than the bears. That's just the way it is. So as we look at the price action, the Nvidias of the world really trading higher, up 4, Tesla up 3, Google up 2. Pretty good price action in large cap tech, and as they go, so goes the market to a certain extent. I found it interesting that with oil getting hit pretty hard, the energy patch was still basically flat on the day. So it didn't really fall on the back of that. I would say if you had just told me that the oil markets were going to fall a couple of percent. I'd have guessed that Exxon would not be up on the day, that Conoco would not be up on the day and such. So where there's bad news and good price action, that's pretty nice price action there out of the energy sector. I don't know if it can continue to withstand that. If oil keeps plummeting 2% a day, I suppose it won't, but good price action and a bad tape for energy. As we look at the markets again, above the 20, above the 50, I don't know that we're in a trending environment. Maybe, just maybe, we'll consolidate, but either way, even within pullbacks and such, you just continue to have to give the benefit of the doubt to the bulls. We're making a big surge. Any pullbacks are probably going to set higher lows and such, so that's the way I would take it. Now, on the possible bull and bear ideas, a lot of this hasn't changed. I would still look in some of these healthcare spaces and so forth, the leading sectors. So let's start with AbbVie. This one can be hard to buy because it's just strongly moving upward, but when you get into an quote unquote overbought condition, a lot of times it just is moving into overdrive. It's just increasing its power and its strength. We highlighted this previously. It's continued to go up. I would just say don't overthink it. It's probably trading up to 200, even above that. Now, maybe there's not enough meat on the bone or something, but I still think it's probably just continuing to the upside. So maybe not super aggressive targets, but upward targets would make sense. Palantir just broke out, and it broke out on volume, and it broke out with increased momentum. If this gives you any consolidation, a day or two pullback, what have you, I'd still anticipate further upside is coming. On the bearish side, look for things that are still possibly holding in a downtrend. So something like CP, maybe it's not. If we just break out to the upside, well, no harm done. We won't enter the trade. But imagine a scenario where maybe you reverse right here at these moving averages. It could be pretty compelling for another leg to the downside. I would call this pattern an inverse cup and handle. You can see the bottom end of the range down here at about 75 and change. You can see the rounded shape came to retest the old support and bounced, and this would be the handle, right? So inverse cup and handle. This is about the area it should fail. If we go higher, we don't trade it. If we turn over, it looks like an interesting chart for a possible downside trade. Now, this week, we've got Fed Chair Powell speaking at the Jackson Hole Symposium on Friday. I wouldn't expect anything out of the ordinary, but there has been a little bit of a track record for those Jackson Hole meetings to create some volatility. So he'll speak to the expectation that they're open to a 50 basis point cut and so forth. Rate cuts are coming in the not too distant future. The question really is how much and exactly when. FOMC minutes come out on Wednesday. We also have some PMIs on Thursday and such, but all eyes will mostly be watching the Fed at Jackson Hole, and you'll get a lot of news out of that. For earnings, Intuit and Lowe's, Snowflake, TD, I think that's Toronto Dominion, Target, Workday, and so forth. Hope you enjoyed the market roundup. Have a great rest of your week, and we'll see you next time. Goodbye, everyone.